Breaking news: after plummeting more than 13% all day on reports that all suitors were pulling out of the bidding war for Twitter, the stock is suddenly moving up off its floor. Right now, it's down 11 2/3%. It had been down more than 13%. Charlie Gasparino just tweeted out news. You believe it's moving the stock?
Well, it is moving the stock. I mean, we know it. Other wire services are picking it up. I mean, here's what I want to put this in context, because I've always caution against investors trading off these things when it comes to Twitter, because this is a really problematic company just in terms of user growth, and there are reasons why people back off this stock. But here's what we do know from bankers that bank this sector, that talk to Twitter, that talk to the potential suitors, who's everybody from Google to Verizon to Disney to Comcast to AT&T. They're all there. There's still, to this day, remains interest in Twitter. The question is, at what price? And when you talk to bankers, what they're saying is this thing still has to drop somewhat more. It's trading at 17. The magic number I hear is $14 or $15 a share. And that's where it becomes that these companies show interest to buy, because you take the $14 a share, $15 a share, you tap on a 20% premium on it, and it becomes sort of buyable at about $14 billion, $12 billion market cap. That's what bankers are saying.
Because it's 12 right now.
Well, it's 12 right now at 17.
Okay.
So if it goes down a little bit, you tap on the 20% premium. What people are saying is, at its current level, you got to pay a premium for these things.
Right.
The premium would have to be in the stock price. So what you would see is a deal as it goes down to about 15, 14, and then you tack on your premium.
Wait, we're mixing $15, $14 per share,
yes.
Or because the market cap, to be clear, is $12.4 billion right now.
Listen to what I'm saying. What the bankers are saying, these are bankers that bank this thing all the time. What they're saying is the stock will have to drop from its current level, where it is $17, to a level that when you add about 20% to it as a premium, it's about at 17, which makes it a $12 billion deal. That's where people think it's not expensive, and it's expensive enough, or it's affordable to buy. Now, we should point out that why did all these companies back away from it? They've been backing away from this for the past year. The notion that this was a new story, that there was all of a sudden a gazillion bidders, I think was wrong. People have been looking at this for a long time. What they're looking at is they like the service. They think it's a hard sell in terms of making money. The only way you buy it is if you don't overpay for it, and the current pricing levels is well overpaid. So I would say the market reaction to my story, as much as I like it, is wrong, because I think in order to get these players back in the bidding,
it's got to be cheaper.
It's got to be cheaper.
Can we go back to that intraday chart?
Yeah.
Because I think that it starts to come up off the down 13%
on my headlines.
Today.
It was on my tweets and my headlines, but I'm being really clear here. I'm trying to be intellectually honest. My report is simply this. There remains interest, no doubt. Maybe that's what people think someone is going to be dumb enough to pay.
Well, especially in the wake
level.
of the debate, where it was the most tweeted debate of all time. Twitter's been around since 2006.
Right, but remember what I'm saying. It remains. There is tremendous interest still in this from all these players. They're they're interested in it. But what the bankers are saying that talk to both sides, the Twitter side, the acquisition side, what they're saying is the stock has to get cheaper for them to come in there and do it. That's what they believe. Listen, there may be some nut out there. Maybe Mark Benioff is going to wake up tomorrow and say, screw it, I'm just going to blow as much. I'm going to buy this thing at $17 a share or $20 a share, put a 20% premium on the current levels, and I'm going to pay $18 billion for whatever that is. It's always a possibility, but that's not what you're hearing from the market. You're hearing interest, as it always has been. Company is still too cheap. It doesn't make enough money for it to justify current levels, unless, of course, they do a Facebook and show some growth and do something. I mean, one of the things about Facebook is that it did make money. Now everybody wants to be it. This thing has to start doing some stuff, and then maybe you could sell it at a decent premium. This
is why you got to follow Charlie Gasparino on Twitter, of all places,
at
@CGasparino.
And here, by the way, I come on here right after Twitter. I mean, it's like instantaneous.
Instantaneous.